If you sell your stock on a Monday, you will get your cash on a Tuesday. That's the easiest way to think about it. And in the past, just a week or so ago, it took 2 days. If you sold your stock on a Monday, you got it Wednesday. So we worked at the Securities and Exchange Commission on a rule to shorten that settlement cycle because today's technology allows that. But here's the interesting thing. We're just back to where we were in the 1920s. There was actually, if you sold your stock on a Monday in the 1920s, you got your cash on a Tuesday. And because of everything going on, they lengthened it all the way to a week, and we've had to slow walk it back. But everybody worked well together. The stock exchanges, the custodians, the clearing houses, and this thing works smoothly. Mexico and Canada, Argentina, Jamaica all joined us. I'm really proud of the work of the SEC, but it was a collaboration across industry. I think that artificial intelligence is the most transformative technology of our time. And I talk about the 1920s, then it was the automobile, electrification of the whole economy. But now we're taking human decision-making and more putting it in the box, in the algorithm. So I think that's transformative. It's a good thing for capital markets, but it also raises real risks of conflicts. What if the algorithm is, in essence, trading against you? Risk of fraud. What if the algorithm is trying to defraud you or mislead you? And also risk, if we're all reliant on one or two models, then the whole capital markets might basically, drive off the cliff together. The SEC runs a civil law enforcement agency. We're a cop on the beat, and you would expect us to investigate where we investigate, right, but we don't talk about it publicly because we follow the facts and the law, and only if we think there's something to bring in front of a court do we then talk about it. Generally speaking, you have to make sure that you don't mislead the public and that you don't in any way do things in the markets that may be manipulative or misleading. And so that's the key thing in our capital market. Disclosure is one really key part of our capital markets. When you buy the stock of a company, you expect that they give you full and fair disclosure. That's, by the way, not what you're getting right now in this crypto field. So I just, cautionary tale there. That disclosure. I believe deeply in competition, and we in the US benefit from very large capital markets, which are 5 times our banking system. $23 trillion banking system, $110+ trillion capital markets. Not Europe, not Asia, that competition. But I also believe in competition between public markets and private markets. Maybe it's because my dad had a small business of 30 people. Maybe it's because I did work at Goldman Sachs. Public and private can compete with each other and benefit the American public. The key is to make sure that there's standard rules, that people get the proper disclosure if you're investing in something, that basic bargain, they get full and complete information on material aspects of the companies, but also that the capital markets, like this here, are operating free of fraud and manipulation. But there, what we have is we have competition between private provision of credit and the banks. And generally, that's a competition that we, promote. Now, at the same time, do we have to make sure the investors in those private credit funds are getting, the disclosure they need and they're not getting misled and so forth. We have in the US already a way that you can invest in various underlying securities and underlying commodities called exchange traded products. In January, we approved an exchange traded product on Bitcoin. And about a week and a half ago, similar filings to list on the New York Stock Exchange, list on NASDAQ and the like, exchange traded products on Ethereum. Ethereum had been traded on the Chicago Mercantile Exchange futures for 3+ years, and the staff looked at that closely and that was approved. Now, the underlying exchange traded products still need to go through a process to have the disclosure about that, and that will take some time, but they're working on that right now.
How about congressional trading?
Well, look, everybody in the markets, 330 million Americans, should understand that you have to play by the rules of our capital markets. And one of those things is that when you trade, you don't trade on what's called inside information from a company that it's not made disclosed to everybody else. But the same rules apply to all of us to make sure that we do right by the law. Let me say something more broadly about the crypto markets. Right now, without prejudging anyone, these tokens, whether they're the ones Jim listed or other tokens, have not given you the disclosures that you not only need to make your investment decisions, but also that are required by the law. It's a basic concept in our securities market. We, the SEC, tomorrow are turning 90. Happy birthday, SEC, 90. And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges like here, this floor of the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. And so you've seen the bankruptcies in this space, and there are some of the most leading lights in this field are either in jail, about to go to jail, or waiting extradition.